Hello, this is Doc Severson for the ReadySetCrypto OMNIA newsletter market update for Sunday, the 1st of September. Now, I do want to make an announcement before we go into this video, because if I do this at the end of the video, fewer of you will hear it. So tomorrow is Labor Day in the United States. This is a holiday for us. And so even though Bitcoin continues to trade, we are going to take one of our 8 days off a year tomorrow. So tomorrow is a market holiday for the larger equity markets. We're going to take that advantage and that opportunity, as well as it's a travel day for us as well too, as we head out to the altcoin mastermind event, which is this week. So there is no newsletter tomorrow on the 2nd of September. And with that in mind, I think we're seeing very low volumes today across the board, across the crypto market here. Really not much is moving at all because of these holiday days, and a lot of people are cooking hot dogs instead of hunching over their monitors. So let's take a kind of a fresh perspective of what's going on here with Bitcoin. Again, I want to continue to go from the top down here, and we have a weekly consolidation pattern. And it should be interesting to see what happens to this energy at the weekly chart as we peel off one more candle off of the weekly trend. I believe the energy will continue to rise on this weekly time frame. It is only a matter of time until we get a primary trending move again, whichever direction that is. Now, as we go down to the daily chart, certainly we have a daily downtrend. That hasn't transitioned into a weekly downtrend yet. We still have to break 9100 for that to occur. So let's put that line right in here. So 9100 is our last line of defense for the bulls at this point before we start to go into a deeper corrective mode. And as I've talked about recently, some of the things that we can look for, if 9100 does break, then we can go down to the volume profile and see that there's a high volume node down here at about 8,000, which is more than likely. You can also see that there's very little volume here. Once it gets below 9,100, I expect it to move quickly, as a lot of people will probably use 9,100 as a support. And maybe even we're going to get one of these stop runs down here. So a stop run would be something where we see the price initially dip down below here, clear out the stops, and then mission accomplished, off we go. That could happen. But the point I want to make here is that when we have one-way moves like this, there is no support or resistance that's printed through there. Markets tend to move in between the high-value nodes or high-volume nodes like this, or actually this is a high-volume node at a larger time frame. So if we go out to the weekly chart, we can see, I haven't looked at this, but yeah, you can see that there is quite a bit of volume executed up at this level. And it's more spread out because this has been a consolidation pattern. So again, in the larger context of things, this is just a consolidation pattern, but that doesn't mean that we can't go through some short-term pain, because a lot of people have jumped on this thing thinking that it's going to be an instant shoot up to 20,000, 100,000. Remember all those bullish articles that we had back in June, July, like, oh yeah, Bitcoin 100,000, here comes the halvening, here comes this, here comes that. And this is typically where the majority gets it wrong once again, and they've got to pay their penance and get basically to the point of capitulation before we'll get our next move. Something else that I'm seeing on just the price here is a good example of fractal patterns that we have. So on the daily chart, we have a bear flag, and this we brought up last week. This is just this bear flag, or really more of a pennant consolidation, just setting up here. It doesn't really matter what the shape is. It's range expansion, range contraction. Here comes the next range expansion again. But notice how this little guy here is a miniature version of this larger one, which is a miniature version of this larger one. So this is how you almost have a present within a present within a present. You know, your typical Christmas joke, you get a huge box and then inside is something the size of a pin by the time you open up all the different sequential boxes inside. So if we go down in time frame, we'll probably see a very similar type of flag pattern to this. And there we go. There's the 5-hour chart. Maybe the 1-hour chart is a little bit too much. You can see, this looks like a huge bear flag setting up here. But right now, this is just a typical choppy, slightly rising pattern, which eventually should break to the downside and give us maybe that final test and that undercut of 9,100. We'll see. And that should be, if there's a lot of volume there, that might be a good place for the price to stop and reverse, for the bulls to jump in, for the shorts to wash out, those kind of things. That could be one of those areas. If not that, then it's 8,000. Again, we don't know. There's no way we can look forward into the time. We can increment the time forward to say, well, with any certainty, we don't know what's going to happen. Now, the next thing I want to bring up when we have kind of a descending pattern like this, and we saw this many, many times last year, was using the MACDs. And this is one time where we'll use the MACDs. Now, a lot of people like to put the MACDs on constantly, and they use the MACDs with oscillators and other trend studies. And by the time that you apply all those studies, which are always in the lower panes down here, next thing you know, you've got price just barely, you can barely see anything going on. And this to me is doing a disservice to price itself, which is why most of the time my primary view is just going to be price and volume. And then as necessary, I will add studies to the bottom to say, okay, what else can we see between the lines here? And that's what studies do. Studies provide a different visual element between the lines that you can't necessarily see unless you can do derivations in your head. You can't necessarily see these with just price and volume alone. Now, one thing we can see is we're approaching some bullish divergence here. So we saw a little bit of bullish divergence showing up down here. This is almost a class B divergence where we have an equal low and higher lows in the histogram. And that led to a nice little pop to the upside. That was all very fun until it gave way, right? And so here we go again. We're close to the same price again. And now what we're seeing is more of a longer term bullish divergence. So the move to the downside is slowing down. And again, this bodes well for it just being a larger time frame, consolidation pattern, guaranteed to make people freak out as we have a daily downtrend inside of there and people lose context for what's going on. And this is why there's so much hand wringing out there and fretting. Now, I'm not going to be doing any trades over the coming week. I'm going to be traveling. I'm going to be on an airplane for like 13 hours at a time, running across the terminal, jumping on the next flight, which is 8 hours. And so it's really very difficult to be able to manage something when you're in the air and depend on some kind of satellite bandwidth. So I would rather just not trade this week and fully invest myself into being there at the conference and not checking my app every 5 minutes to see where Bitcoin is doing. But I will be doing reports from Bali out there as well. Just won't be talking about any live trades. But this is a condition where we can be selling puts if we want to. So the first thing that we talked about in the options program is if you're going to sell a put option to establish an income position. Typically, we're doing these out of the money, and here is at the money, out of the money for a put would be down here. We're going to be selling out of the money puts. Where this is going to be at, well, it depends on what's offered in the chain. Certainly 8,000 is one option. Well, maybe even 9,000 is one option. The closer that you get to the money, the more aggressive that it is. However, the more handsomely you'll be paid for taking that risk on. So this is more aggressive. This is slightly aggressive. And the most conservative one would be like way out of the money down here, but we're not going to be paid well for that. So let's take a look at the option chains and see what we could get for these. Okay, so here's Deribit. So right off the bat, we can look at the different chains here. We have expirations for 6 September, which is this Friday. We have the back week, which is 13 September. We have front month, which is 27 September, about 4 weeks from now. And then we have back month, which is 25 October. So generally what we have is the more time that you take, the more premium that you'll get. However, you're going to be an open target for that time. And this is a slightly different concept for a lot of you out there, that time equals risk. The longer that you're in the position, the longer that you have an obligation. So let's start off with the 6th September options, and we can see that we have a bunch of strikes out here, which are in $500 increments, which is good. That's good. So the very first and most aggressive one that we could sell down here, according to the chart, was the 9,000. And boy, we're just barely going to get a 1% return for something like this. And that's if we hold the option to expiration. So we could certainly take this. This is aggressive. We can be in and out of this position within a week. Not very well paid for it, but still, it's nice that we have the option to be able to get in and out of the position. So this would be a great trade if you feel with every fiber of your being that the 9,100 level will hold a support, or if it doesn't hold a support, you would be there to be able to roll the position out. In other words, close down the existing short position and then roll it further out in distance and time. It's certainly one way to do something. This is more for the active trader that can do something like this. So you'll see this move around like crazy as we get volatility with this. And this is due to the gamma that comes into play around at the money near expiration. Now, if we go out to the back week, we could do the same thing and get a bigger credit for that. However, we have a little bit more time risk. Can we get down to the 8,000? Yes, but we can't even get a 1% return on something like that. So now we can move out to 27 September, and now we have a few more alternatives that we could sell. We could certainly sell the 9,100 for a big fat credit there, and this one looks, pretty good. That's probably a 6% return on there for expiration. We can go down to the 8,000 strike, and now we can look at something close to a 2 to 3% return for this one, and maybe even, well, no, we can't even get down to the 7,000 strike. That's just not worth it. You're picking up nickels in front of the steamroller for a situation like that. So this one is viable for 8,000. And again, part of the problem here is that we don't have much implied volatility to work with. So the move to the downside has come at a very glacial pace. It's not one of these like drop off the face of the cliff. That's when you get the big implied volatility spikes that you can sell into. That's when you can sell the fear, which is actually the very best time, and is also coincidentally the time that the fewest people will do it because they're going to be curled up in the fetal position. So hopefully you can see that this is a little bit of a Rubik's Cube, right? This is not a linear world. All of a sudden we're working in 3 and 4 dimensions at the same time. And, this is the analogy I always use, is that of a puppeteer. You've got 4 strings and you're pulling each one depending on what it is that you're trying to accomplish. Now we can even go out to the back month here in the October options, and we can realistically sell the $7,000 put for, 3, I don't know what the return on here, but just ballpark here is probably a 3% return that we're looking at. Now, there's just one final thing that I want to bring up today. So I want to talk about, I've done a couple of trades with this since I've lit up the Deribit account and since we've done the program. And one of the things that I talked about was when you are trading directionally. So if you're trading a long position, the price has got to go higher for you to make money on it. It cannot go sideways. If it goes sideways, you lose money through opportunity cost. And certainly if the price goes down, you lose money. And what I talked about was when you sell options like this, when you sell a position, that if you're selling puts, certainly if the price goes up, you can make money. If the price goes sideways, you can make money. And even if the price goes somewhat lower, you can make money. And only if it really plows against you is where you're looking at a loss condition. Although you can somewhat mitigate that by closing, rolling, going further out on time and distance, and you can delay your profits on the position. So to prove this, let's look at the 2 trades that I've done, and both of them actually showed the condition where the price went against me. So I was wrong, at least in terms of saying, hey, the price should bounce here. We don't know what's going to happen in the future. None of us do. And this is why it's important to have strategies like this. So notice this one. We sold a $9,000 put, and this was way back in, well, 22nd of July. And the price at the time of Bitcoin was 10,466. Notice when I closed this one. I closed this one about maybe 5 weeks later, and the price was down here at 10,155. Now I sold the option at 0.064 BTC, and I closed it down at 0.003 BTC. So there's basically about a 0.06 profit in there, times the position size. So definitely the price went down over the course of those 5 weeks, and I still made a pretty nice profit. Now the other position that we did was on the 14th of August, and this is the one that we did in the Discord trade room. And I wasn't really happy with this trade. It just felt like, yeah, let's get something into play here. Let's stop moving around. And so we sold this one for 0.045, and the price was 10,532. And you can see that the price actually did drop during the tenure of this, and we made a nice profit. We essentially secured about half the available profits of this trade. So once again, the price can go lower against you, but it's that time value decay which is working in your favor, which allows the position to gain a profit. And this is something I've been using now for, 15 years now in the equity markets, and it's something now that we can just use for the BTC and crypto markets. And I expect to see this continue to expand into more coins and more liquidity and better alternatives across the board over the next year. All right, folks, that is it for today's report. Tomorrow's report is going to be somewhat different because I'm going to be literally flying for 30 straight hours, and it just won't make any sense for me to try to cut a video in midair. So I'm going to cut another one today, which is on a related topic, which will be part of Tuesday's newsletter. Take care, guys. We'll see you when we land.